Money is something we all need to survive and thrive. I need it. I'm sure you do too. That's why we work day in and day out to earn it. And most of us want more and even so much more. Truthfully, like I always say, our social standing is often tied to the balance in our bank account or what we own. Many of us feel enslaved by the idea that money makes the world go round. Yet, despite its significant role in our lives, most people have little understanding of money and its true function in society. This is largely because schools don't teach us about money, and for many, neither do our parents. As a result, many are left unaware of how money works, how to obtain it, how to grow it, or how to make it work for us instead of the other way around. Take my friend Mike as an example. He maxes out his credit cards to buy a new car and expensive gadgets, even when he does not have the means to pay it off immediately. Over time, he accumulates high-interest debt, and instead of using money as a tool to build wealth, he became enslaved by his financial obligations. This often happens because people are taught to buy now, pay later, but aren't taught how interest and debt work. This lack of knowledge about money often leads to financial problems, like high levels of debt, maxed out credit cards, and living beyond our means to keep up with others, regardless of our ability to afford it. Ultimately, it prevents people from achieving true financial freedom or wealth, ensuring that they remain controlled by money rather than being in control of it. To gain control of your finances and begin building real wealth, you first need to understand the concept of money and its role in society. One of the most common monetary systems today is the fiat monetary system, which is used in most countries. Under this system, the government creates and controls the money supply, and the value of money is determined by supply and demand in the market. Governments print physical money, like bills and coins, while also managing digital currency like bank accounts, debit cards, and credit cards. This creates a vicious cycle where they work harder to pay off debt, but never build real wealth, as they're always working for the credit card companies rather than for themselves. While the government controls the money supply, it's not the only major player. Central banks, which are independent from the government, play a crucial role. They oversee the country's financial policies, manage the money supply, and, if necessary, lend money to commercial banks during a financial crisis. They can influence the economy by buying or selling government securities, adjusting interest rates, or changing reserve requirements. These actions can either increase or decrease the amount of money in circulation, impacting inflation and economic growth. A person might spend a large portion of their paycheck on designer clothes, new electronics, or even renting an expensive apartment to maintain a lifestyle that looks impressive to others. Even though they can barely afford it, they prioritize outward appearances to keep up with the Joneses. Commercial banks also affect the money supply, though they are more limited in scope compared to central banks. They provide services like loans, mortgages, and credit, and help facilitate currency exchange. However, they are regulated by the government and do not implement monetary policy. Why does all this matter? Understanding the money supply helps explain inflation and deflation, both of which can significantly affect the economy and your personal finances. Inflation happens when the price of goods and services rises over time, reducing the purchasing power of money. In times of high inflation, like what's happening in Canada and the US today, the cost of living increases, and you get less value for your money. This can lead to a recession. As people spend less, economic growth slows down, and businesses struggle. Deflation, on the other hand, occurs when the price of goods and services falls, increasing the purchasing power of money. While this may sound good, it can also trigger a recession if people hold on to their money, expecting prices to drop further. This can lead to reduced production, lower wages, and increased unemployment. In both scenarios, central banks and governments work to manage the economy by controlling inflation and interest rates. The goal is to maintain economic stability and avoid extreme inflation or deflation, which can lead to a recession. So, how can you navigate these economic challenges? First, it's important to track income and expenses. Try to understand where your money is going. Identify areas where you can cut costs or reduce unnecessary expenses. Again, prepare for tough times by building an emergency funds for unforeseen circumstances. Ideally, you should save enough to cover 3 to 6 months' worth of living expenses. Next, pay off debt or avoid accumulating more. Again, it is okay to freelance and have some side hustles because in tough economic times, having multiple sources of income can reduce reliance on one job or business. Increasing your income through multiple streams is also crucial. Explore new skills or business opportunities to boost your earning potential. Improving your skills makes you more valuable in the marketplace, allowing you to adapt during tough times. During high inflation or a recession, rising interest rates make debt more expensive. Also, buy a home that's within your means, not one that stretches your budget. The ultimate goal is to be financially prepared to weather any economic downturns. Plus, if you're in a strong financial position, you can take advantage of opportunities that arise during times of economic distress, such as purchasing undervalued homes or investments. Diversifying investments, whether in stocks, bonds, or real estate, can help balance out economic fluctuations. It is important to create a detailed budget because during uncertain times, tracking every dollar is key. Look for patterns where you might save or adjust spending, and for businesses, you need to keep a close eye on cash flow. You can access government support, especially during economic downturns. Many governments offer relief. Again, always be strategic in decision-making. You need to always assess risks carefully before making big financial decisions in your investments or business moves, or maybe you want to change career. For future business owners, it is important for you to embrace digital tools. This is because technology can streamline processes, get you more reach and wider audience with reduced costs, and increase efficiency. And for today, my last point is your mindset. You need to stay positive, but realistic. Your mental resilience is key in facing financial adversity. Also, don't be afraid to seek advices and connect with others who have navigated similar challenges. By understanding how money works, you'll be better equipped to make informed decisions that can benefit you in both good and bad economic times. The key is to take control. Either you work for money or money works for you. You must understand that economic challenges are often cyclical. Prepare in advance by maintaining reserves and planning for downturns. That's all for today. If you enjoyed this video, don't forget to like and subscribe for more financial content. Until next time, be wise and take control of your financial future.